So is the AI hype finally subsiding? One stock that has been a big beneficiary of the 2023 AI boom is C3.AI. The aptly named company sells AI services to enterprises, but is highly unprofitable and trades at a steep valuation, with shares up 176% year to date, even after falling in recent weeks. So if you own C3.AI, it's now the time to sell this high price money loser. According to the charts, the monthly chart shows a bottoming out process, a accumulation phase level in which price did reverse, hitting a low of $10. Scrolling up to the weekly chart, we can see that price broke out to the downside in recent weeks. Question is now time to buy? Let's continue with the article and then we'll finish up with the analysis. So originally, C3.AI was founded as C3 Energy, selling services to the smart grid market when the business idea was hot. Then in 2016, it changed its name to C3 IoT, Internet of Things. To get in on the buzz around the Internet of Things, it was only in 2019 that it changed its name to C3.AI and began its focus on selling enterprise AI products. This is kind of fishy, right? It went public shortly thereafter through a reverse merger with a special purpose acquisition company, aka SPAC, at a market cap of over $10 billion. So does the company's management team actually want to service customers with AI applications? Or are they just happy to ride the current wave of what investors are excited about? In the company's fiscal 2023, which ended April 30th, it generated $267 million in revenue, up $14 million from the year prior. In order to achieve that revenue growth, it spent $183 million on sales and marketing. That is $183 million in customer acquisition spending in order to add $14 million in new sales. Due to the change in its revenue mix, C3.AI gross profit actually declined in its fiscal 2023 to $180 million from $189 million the year before. This means the company actually spent more on marketing than it generated in gross profits. Add all these numbers together, and you guessed it, what the bottom line looks like: bad and getting worse. In fiscal 2023, the company posted an operating loss of $290 million compared to its operating loss of $196 million a year prior. Now let's get into valuation. After the stock's huge run up this year, C3.AI has a market cap of $3.53 billion. That gives it a trailing price to sales to ratio of 12.6, or around 5 times the S&P 500 average ratio of 2.44. If C3.AI's revenue isn't rapidly growing in 2023 during a boom in demand for AI products, when will it ever start growing? Shareholders, backholders need to look in the mirror and ask these hard questions about the company and this management team. Investors should be cautious about C3.AI. This has the potential to be just a hype train headed for disappointment in the coming years. So if we go back to the charts and we look at the daily chart, we can see earnings is next week. We could also see price is back at a level of interest at the $28 level. Now the reason why I did not call this a daily buyer's level is when I look at the price structure, it looks great, but the volume out, which exceeded the pivot high to the left, didn't kick in until this candle here. So although you have a rally in price, you have basing candles, and then a rally out, which took out the pivot high to the left. It wasn't done on above average volume. So this green candle is this candle here. Now it is above average volume, but compared to the other candles, this level would have more weight if the volume on this candle was this volume bar, or this volume bar, or this volume bar. So as a result, the level still has to be respected. However, it's not a setup. I would classify it as a BC setup, just based on volume. Structure, it is an A setup. So this level has to be traded with caution. What's interesting is that you have the 200-day moving average slowly creeping up and approaching this level here. That should further strengthen the zone. But this 200-day moving average will not get to this level prior to earnings. Now, if we look at the last 3 earnings, price was muted. In March we had a gap higher. In December, price was muted. And then in August of last year, price gap down. So we had a gap down, a gap up, and 2 muted earnings reports in which price action, how price action reacted to earnings. So what will be interesting next week is, what is price going to do? Are we going to see a spike higher or a spike lower? So until earnings, if you are on the sidelines of C3.AI, I would stay on the sidelines. If you are aggressive, you can buy when price dips into the zone. If you're conservative, wait till thereafter and follow price action and its direction. Thanks for watching. Subscribe. Please like the video.